So in a way, with all of the potential activity, and please correct me if I'm wrong, but in a way, are you saying that you have all of these Wall Street actors that are seeing what's going on potentially with this online activity and saying, well, we know that there's going to be a high volume of buys ahead of time, so I'm also going to buy under kind of the guise of all of this online activity going on, and then potentially make out on top of it as well.
Yes.
That's what you're saying too? So
yes, that is my suspicion, yes.
So you suspect that this is not just Redditors buying this stock, but that it's also potentially larger actors on the market, and that's something to explore, that this is potentially larger actors on the market looking at activity happening ahead of time and then getting ahead of it that as well, and almost using that as a veneer for riding this stock.
Yeah. And there's one other wrinkle to all of this that I think is important for folks to know, which is a lot of folks have used the app Robinhood, which I like to think of as the Facebook of stock trading. And I say that because Facebook is sort of designed to keep you on Facebook, right? It's designed to grab your attention and keep your attention. And Robinhood is very similar. I would describe it as gamified. I know a lot of Robinhood folks would disagree with that assessment. That's just my personal assessment. But Robinhood is free. It doesn't charge commission. And the way that their business model works is they sell their order flow to market makers, which are these sophisticated Wall Street participants who execute the orders for them. The market maker they sell the most of their flow to is a hedge fund named Citadel. And Citadel is not just a hedge fund. They are also a market maker. They are also a technology company. They are owned by a billionaire named Ken Griffin, who is out of Chicago, who has funded some very questionable things in his political giving. But Citadel pays for Robinhood's order flow. And strangely enough, or maybe not so strangely, one of the hedge funds that Wall Street Bets was very excited about blowing up, Melvin Capital, was rescued by Citadel after it blew up. So Citadel is paying for the order flow on Robinhood, which is driving up the price of the stock, which crashed one hedge fund. And then Citadel sort of bought that hedge fund on the cheap after it crashed.
And so, for folks at home, so that we can put these dots together, because I think this is an important relationship for us to communicate and map out with you. So basically, also what you're saying now is that you've got Melvin Capital, right? Melvin Capital is the hedge fund that was shorting GameStop. They were the folks that were saying, we're going to make a ton of money. We're going to make a ton of money off of GameStop's stock going down. Wall Street Bets comes in, potentially with folks on Wall Street looking at what Wall Street Bets is doing to kind of supercharge this activity and say, you know what, we're going to make the stock go up, which would, of course, put Melvin Capital into an extraordinarily compromised position, which would essentially prompt them to get bailed out by one of the groups known as Citadel. Now, okay, so Citadel then swoops in as one of the actors to bail out Melvin Capital. But Citadel's owner also co-founded a different Citadel. They're both connected, hence the same name by the same owner. They are two technically different entities, though, but the same founder.
Right. So Citadel LLC is the parent company. Citadel Securities is the market maker that buys the Robinhood order flow. But the parent entity, Citadel LLC, is the one that swooped up Melvin Capital. And Congresswoman, I should just add there were actually two Wall Street firms that bought Melvin Capital, or rescued it, I should say. Citadel and another one, now I'm blanking, of course, on the name, but it's the new fund of Steve Cohen, who you may know as the owner of the New York Mets. And Steve Cohen is famous for all the wrong reasons.
Is what the chat says.
Yes, thank you. Steve Cohen is famous, or infamous, I should say, because he used to have a hedge fund called SAC that pled guilty to insider trading in 2013 and had to shut itself down. And so this is the next iteration of Steve
All
Cohen.
right. So we've got Citadel and then Point 72, who bail out Melvin Capital, who are relying on GameStop stock to tank. So Citadel swoops in to bail out Melvin Capital. But then meanwhile, this connected Citadel under the same founder, it also receives the advanced information from Robinhood. That's what you're saying?
Yes, and I should clarify that's not unusual. That is allowed. It is something called payment for order flow. During the Obama administration, they raised the question about whether or not that was a good idea. They asked one of their SEC, which is a market regulator, they asked the SEC's advisory committee if payment for order flow was just kind of disguising how you were really paying for stock trading. So the idea is Robinhood is free, you don't pay commission, but the broker is supposed to make sure that they give you what's called best execution. So they execute your trade and either get you the best price or they execute it really, really fast. Citadel is paying Robinhood for that order flow, and they pay them via these things called rebates. And Citadel might pay, whatever they pay. A different market maker may pay a little bit higher rate. And what is not supposed to happen is the broker is not supposed to give the order flow to the highest bidder, because that would prevent them from giving their customers best execution. People should know that Robinhood was accused by the SEC in December of 2020 of not giving their customers best execution and actually costing them $34 million, even when you accounted for the free commissions, because of their failures to provide them with best execution.
So you're saying just a month ago, Robinhood was in trouble for not optimizing their customers' trades?
Yes, it was covering a period of time farther back in time, right? It was, I think, in the 2018 range, but the action came down. Robinhood did not admit nor deny guilt in the action, but they did have to pay a civil penalty to the SEC to settle the charges.
And they did pay that penalty to the SEC. Yes. So these were charges that came up from the SEC just 1 month ago, but these were they were regarding actions that happened in 2018, but that this is documented past behavior from Robinhood.
Correct. And the other thing is Robinhood wasn't disclosing, another part of that action was Robinhood wasn't disclosing that they were paying our market maker for the order flow. So why do I bring all this up? I bring this all up to say, is Robinhood doing the best by their customers? Are these fintech companies that are so easy to use that lots of people are using to trade stocks, are they doing right by their customers? I think that's an important question that regulators should be asking right now.
So let's talk a little bit about what happened today with the freeze that you saw, not just on Robinhood, but on, I believe, E-Trade, Wellbull, etc., where you have a lot of these retail, these retail platforms, all of a sudden putting a halt to some trades on not just GameStop, but there was also some activity, I believe, around AMC and other stocks that have been particularly identified by the subreddit Wall Street Bets. Tell me a little bit about what is going through your head when you see activity like that. And, for folks at home, there are multiple possibilities here. I think a lot of people sometimes want to jump to certain conclusions, but in order for us to really responsibly look at the situation, it does seem like there's more than one potential explanation. But I'm interested in hearing what's going through your head when you see that, and what are some of the possibilities that could arise?
So I just don't know why Robinhood made the decisions they did to stop trading, allowing purchases of certain single name stocks today. Their decision was a little different than some of the other brokerages. So for example, so think of it from the point of view of the brokerage, right? Especially if people are selling stocks short, which has the potential for unlimited losses. If your client goes bust and enough of your clients goes bust, then the brokerage goes bust. Mm-hmm. So what a different brokerage did, not Robinhood, but one called Interactive Brokers and some other brokers on the that regular people use, is they just changed what's called their margin requirements. So if you wanted to buy a stock in some of these really active, volatile names today, you had to supply 100% cash margin. And what does that mean? You basically just had to front all of the money yourself, which might sound funny to people who don't trade stocks, but believe it or not, you can sometimes trade stocks with borrowed money. So they were basically saying you can't borrow any money. You got to trade cold hard cash if you want to buy these stocks. So that's what I sort of would have expected to see from everybody. Instead, what we saw is Robinhood just straight up saying you can't trade in any of these names. Now, I don't know that we know any more than that. Was there, direction coming in from regulators? Was this just a decision made by Robinhood? I don't think we know, but I was a little surprised at their action as it related to what other brokers did. And I should just say, if we can just rewind very slightly, because I forgot to mention this before about the whole idea of payment for order flow. The reason that's important is because the firm that you give your order flow to knows what your executions are, and they can run in front of it and front run and trade ahead of it and make profits, which may be fine or may not be fine. But I just thought that that's important to mention.
So you're saying,
Citadel.
Sorry, you're just about to say, and Citadel's the one who receives that advanced
Correct.
information from Robinhood. So
Correct.
all of these folks, but that advanced information only lasts for a few seconds, right?
Correct, but Citadel is known, and other entities that do this market making are known for their high frequency trading algorithms. That's their specialty. They're experts. They hire tons and tons of programmers, and so they're allowed to make profit ahead of that. But I think the question that a lot of people have, and we just don't have enough information to know, is were they doing more with that information than just executing the trades?
And so those are some of the questions that seem to be outstanding, right? Because if Citadel's receiving this advanced trade information from Robinhood, I go on my phone, except not me, because I don't believe members of Congress should own individual stocks, so I don't have any. But hypothetically, if I'm on Robinhood and I hit my order along with thousands of other people at that moment, Citadel is potentially able to get that information milliseconds in advance. And in those milliseconds, their trading algorithms could adjust, knowing that advanced execution information. Is that correct?
Yes. And I'll say that since a lot of the Robinhood trades are very low volumes, what they often do is batch them together. And so Citadel might be trading in much larger volumes and then matching the orders as they batch them together. Again, all in this sort of time of many microseconds. But that's what they specialize in doing, is this very, very high speed, high frequency trading, as it's called.
And so I think here, for folks that are watching at home, this is what raises a bunch of questions, not just from me, but also from, I think, this is why this is starting to attract the attention of regulators, members of Congress, et cetera, because there's a lot of policy questions that come up. Policy questions about shorting stock, policy questions about, as you said, some of this advanced information. You mentioned the Obama administration started to raise some questions about the potential for this. And I think this also is about power, right? Because everyday retail investors don't get that. Even if you were able to, who knows, program something at home, you do not have that millisecond advance information. You just don't have the market power to have that, right?
Right. And I think that's the reason why, yes, lots of people are making money right now. Yes, one or two hedge funds are blowing up, but there's still always going to be a systemic disadvantage that retail has. And that Wall Street is always going to have the advantage. They have more data. As you said, Congresswoman, they're faster. They can execute things faster. And so they're always going to run circles around the little guy, even if it seems like they're losing.